Welcome, everybody. I'm Mark Peter Davis, managing partner of Interplay. I'm on a mission to help entrepreneurs advance society, and this podcast is definitively part of that effort. Now, today we're doing a really interesting one. We've got Chris Zhang back on, my partner and the CIO of the family office, who is back in to talk about his perspective on China, which is always extremely unique as he grew up there. He's an American citizen, and he's a sophisticated financier, been a trader for a long time, worked at major Wall Street shops, and really has his ear to the ground on these two different geos, the politics between them and the financial implications. Now, he did a segment in May of 2023 covering what he saw in China and how he thought about it, and it garnered a lot of attention. It was one of our more popular episodes. And so today we are doing a recap. We're coming back in, and Chris has given us an update. Currently recording at the end of February of 2025. And he has a lot to say. So I hope you enjoy it. And without further ado, let's jump right in. Excited to jump in?
Absolutely. I was just there personally. So there's a lot I could share and over the data.
And obviously there's a lot going on around the world, which they're in the mix on. Let's start at the high level. Let's jump into just economic overview. What's happening within the country? We're getting the mainstream media in the US, I think, does not paint a clear picture of what's happening over there.
Yep.
And it feels like the norm here is to be misinformed. So what's the real? What's happening in the Chinese economy?
Yeah. So let's start there. I have some data to share just to contextualize what I'll be talking about. I think if I have to summarize in one sentence, the economy in China is stabilizing. I chose that word carefully. It is not, I wouldn't call it rebounding or recovering. It's stabilizing. Which means it's finding the bottom. Data that are coming in are showing signs of stabilization. So for instance, GDP, let's start from there. And 2024 GDP came in along with first quarter at 5%, which was about the expectation, right? And that 5% might shock people from a headline perspective because people still live in the world in the early 2010s where China's growing at 8% a year. That hasn't been the case for the past 10 years. Since 2015, China's been growing at around mid-single digits, right? So this 5% is very much in line with sort of the past 10-year average, which is what you would expect an economy as big as China, which is marching into a developing economy, to be performing. So it's nothing too surprising one way or another. Outside of GDP, there are other very sensitive data that people are tracking with specifically regards to China, things like import-export, things like industrial production, and PMI. PMI, again, is the manufacturing gauge. And anything above a 50 is signals and expansion. Anything below a 50 is contraction. All across all of these data, China is right around historical averages, right? Industrial production grew right around GDP, in line with GDP, 5.8%. PMI sort of been fluctuating between 49 and 51 in past 4 quarters. No strong signals one way or another that it's making a push into, sort of back into the growth mode or is collapsing. Absolutely not. So it's just stabilizing across the board. That's not to mention there are not concerns, right? So maybe to preempt your question a little bit, look, there are definitely still concerns in the economy that we previously talked about. The most fundamental concern, number one, nothing comes close, demographics, right? China population replacement rate currently is at 1.1, right? You need to be at 2.1 or so to break even. Means population does not decline. 1.1 means that in the next generation, all of 25, 30 years, the population will halve in China. That is a concern across every metric and every sector, and that is not trickling into the data yet. But more immediate than that is, the two concerns that everyone's been talking about in news and or otherwise, deflation and housing market. Deflation is here. There's no avoidance of it. Doesn't matter how the data is reported. CPI has been flat, but a lot of it's been helped by the spending spree before Chinese New Year. PPI, which is the leading indicator of CPI in a way, has been negative for the past, since October 2022. So almost 2.5 years of negative PPI. It's deflation is here. There's no argument. And when it comes to housing market, there's no other way to characterize it but say that it's still somewhat in shambles. Residential property sales were down another 18% in 24. Now that's after a 5% down in 23 and a 30% down in 22. So we're about 50% down from the peak last achieved in 2020. Yeah. And property investments overall, same story, down about 50% from the peak. It was down about 11% in 24. So the money's not there. Housing market is definitely overbuilt in select geographies, not necessarily true across the whole country. People are not buying. Okay, these houses are not turning hands; they're staying where they are, and these are important part of the economies that people are sort of looking at and tracking for investment purposes or otherwise.
I think when I hear all this stuff, look, we're focused on the short term.
Yep.
And I know from a trader perspective and someone who's monitoring the markets in the way you are, these narratives of the ebbs and flows of different ingredients that kind of make the formula for the economy going up and down. I get it. But when I hear this narrative, and usually when I find myself socially having conversations about China, I hear wild swings in perceptions. Some people are saying, hey, biggest global competitor, obviously. Other people are saying, at the dinner table, it's not relevant. They've got all these issues within the economy. And I think there's psychological influences on both of those paradigms that maybe even outweigh the data. When I look at the broader trend that's happening in China, this is a 40, 50-year story, right? And it may only be the first of many chapters of 40, 50-year chapters, right? So if you zoom out for a second, Chris, and you look at taking this, 12, 24-month window into context, the high-level narrative is still that they've gone from, not being a very developed country to industrialized, right? There's no end in sight. That's the backdrop of all of this conversation, correct?
Yeah, and on top of that, the entire economy is transforming from a manufacturing based economy to a service based economy, like all the developed world have gone through, especially the US, right? So if they're part of that, they're on that path, and there's no argument in that. But to answer your question more directly, I want to maybe reference Ian Bremmer, who was I believe president of Eurasia Group. I was at a conference where he was speaking. He tackled this point perfectly, in my opinion. The one thing that we need to kind of get people's mindset changed here is, people often compare, let's say, U.S. China to like U.S. and Soviet Union back in the Cold War era. It's just not the same at all on multiple fronts. But the most important difference here is back then, military might and economic might are part of the same thing, right? Both of these countries dominate in both areas, in both domains. That's not the world we're living in right now with China. The world we live in right now is a singular domination on the military front by the US. Okay, China is nowhere near when it comes to military might. So there is no competition. US is dominating from a military perspective. But economically, it's not just those two countries either, right? It's US, obviously. China is not going anywhere, despite all the trouble they face. Still one of the world's biggest economies and number one most important trading partner for the vast majority of the world. But you've got European Union as a real, power, and they can't be ignored. And you've got the rise of India, and of course Southeast Asia and Africa. So it's a multimodal world when it comes to economic domination, but militarily it's just US, right? So it's completely different dynamic versus what was the case maybe 30 years ago. And so China's here to stay. Economically, there is no question. There's no trouble. There's nothing that, population, all these things considered, they're here to stay now, and they're here to stay for the next 20, 30 years at the bare minimum. So that's just something just to keep in mind. And I think very important to not ignore that fact. Yeah.
As you reframe the geopolitical landscape with a whole bunch of economic powerhouses now, one of which is the US, one of which is China, and there are others, right? When you kind of circle the groups, and it's not a wildly imbalanced monopoly. by the US. When you reframe it that way, and then you overlay the trajectory of the Chinese population, you overlay a deglobalizing world and supply chains breaking and being reorganized. How do you draw the dotted line for China's position over the next 10, 20 years within that broader economic balancing act?
Yeah, that's a great question because this is this is the essential question for China really going forward. I think again on the back of that promise, that premise that we just talked about, China's not going anywhere. They're here to stay economically, but how does that globalization or deglobalization play into that? Because what we're seeing right now is not necessarily deglobalization. It's more like a regionalization, right? So the world is kind of falling into 2 to 3 camps, but within each camp, globalization is still expanding. It's just that there's a clear divide.
There's regional supply chains developing.
Exactly.
What's happening.
So supply chains are changing on multiple fronts, not in a very dramatic way, but it's definitely changing. There's more supply chain being shifted from China to, let's say, Vietnam to India, across the board. But the vast majority of the cheap labor supply is still in China. So it's going to take decades for that to play out. But there is also interesting because European Union is kind of stuck in the middle, right? They're kind of backed by the US militarily. But at the same time, China is their more important trading partner at this point. They have to play a very refined game, being in the middle, not damaging either side relationship because it will be detrimental to their economy, and staying neutral wherever possible. So I see that going forward, China is going to drive that camp and it's going to globalize. So within that camp, right, there's going to be more ties between China and Southeast Asia, more ties between China and even India, even though India is trying to speak in the camp of the US, and definitely more ties with Europe and other developing nations like Africa and the Middle East. So same thing goes for US. Despite all the rhetoric, which I'm sure we'll talk about on tariffs and all these sort of stance that the current administration is taking, globalization within the US camp is also going to continue to expand. I don't see us ever parting ways with our trading partners like Canada and Mexico, despite all the tariffs. So it's here to stay. Globalization is here to stay, but it's going to change in a different direction. Yep.
Yeah. One of the ways it's been framed is there's going to be 2 major hubs. There's a Chinese-led hub and an American-led hub. And I think we have, US kind of sits on top of the new world and integrates South and with Canada.
Yeah.
And China obviously does Southeast Asia. I think that in that paradigm, it's a really interesting story for Europe. Where does Europe sit with this? Because they're a little bit, they're across an ocean from the US and they're connected to trading partners over there that have a different value system in the way they govern. So,
and not to even complicate it further, I don't know what happened recently at the Munich Security Conference, where basically U.S. decided to back up from military support for Europe for the foreseeable future, and that's going to change the dynamic, right? Because that makes Europe less dependent on, or forces Europe to be less dependent on the U.S. militarily, which potentially could push Europe the other way, because they're still value that economic partnership with China. And where does the Middle East sit in all of this? And Africa, where it was receiving most of the money from China to build its infrastructure, but exporting a lot of the goods to the US. And so both sides are also very important, equally important for them. And both, Europe, Africa, Middle East, they're all going to be in very complicated situations going forward. I don't necessarily think they need to choose a side per se, but it's all case by case. But the news headlines for sure will be messy. Let's put it that way.
It certainly could create a catalyst for a leadership moment within Europe to centralize and be more a standalone power.
Yeah.
How does the Trump trade war tariffs, with respect particularly to China, how does that play into the short to medium term dynamics?
Yeah, this is interesting because there's obviously it's covering news headlines, it's moving markets. I want to just remind everybody that we've seen this before. There's a 1.0 version of this that's happened not that long ago, and we can literally dig out the news cycles and see exactly what happened. And I believe the the 2.0 version will be a lot like the 1.0 version, which is escalation, 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 all to build leverage on both sides, so that when they get to talk, each side has something to say and back down from, and then meet de-escalation, right? So this is exactly what happened in 1.0. I see the same thing happening again. The news cycle is very negative. Both sides are building up tension, not talking, but at the same time keeping the door open for a discussion in person, which is going to happen. And when that happens, risk on de-escalation. Because why? Because there's no in neither side's interest to do this, and they know it. They're the smartest negotiators in the world and in the room. They know what's good for them. The current situation is not good for either side. Nor is it good for the rest of the world. So this is sort of a typical sort of a game of chicken type of game theory situation. Someone is going to back. I mean, they're more likely together is going to de-escalate at the same time. That's not to say that there will be core industries that they're going to forever fight on, right? There are some, like AI, like chips, like quantum computing. These are areas at the core of competitive advantage of US and potentially China in the future. Neither side is going to back down. They're going to escalate, and there's going to be tariffs. There's going to be restrictions on chips and restrictions on investment flows, either way. But broader industries and sectors like agriculture and materials and metals and other sectors, there's just no reason to do that. And so that's just leverage at the moment.
One thing about looking at this tariff pattern is it did fit into the narrative of accelerating the shift in supply chains, right? When you throw a tariff on goods going to or coming from China, the U.S. ones domestically are more competitive in the U.S., and the regional ones in Southeast Asia and Asia are more competitive there. And it shifts. It shifts who people are buying from. It changes the systems. So I did view it when I was looking at it, I was thinking, oh, maybe they're trying to accelerate in a certain intentional way this reprogramming of the supply chains to be kind of within the local geographies. I wouldn't be surprised, though, about how much brinksmanship and everything else is at play that is maybe not as long-term in thinking.
Yeah, absolutely. I agree with that. And by the way, there's another interesting framework around this that I also heard from the conference is, look, so there are two biggest technology trends currently that is happening around the globe. One is obviously AI, and the second one is sort of called electrification of automation, supplies, EVs, all these things. And if you think about it, AI is currently still dominated by US, and that's the core competitive advantage the US is going to enjoy for the next 10 years. At least that's what the country is hoping. And then China is dominating in the EV market, absolutely dominating. These are two core sort of technologies that each side is trying to push forward and lead the world with, right? And if you ultimately get to a point where both sides are trying to settle on something, it could be that you try to continue to dominate this market, which means tariffs on Chinese EVs in the US will stay for sure, and knowing that China has won, but you can't let them win 100% of the market. And then AI and chips and these models we're talking about, U.S. going to try in everything in its power to stay ahead, and therefore restrictions on investment, chips, and all these things will follow and here to stay, right? So that's kind of another dynamic to watch for. It's just which one is better at what, and therefore what they're not willing to give up, and that's going to drive policy changes for sure going forward.
And to layer on top of that, to make matters more complicated, it used to be a country got ahead in something and the time to catch up was decades. Infrastructure, know-how. We've got DeepSeek showing up, which maybe is a harbinger, maybe is a little bit of hand-waving.
But
it kind of signaled that the catch-up cycle, when you can maybe study other people's technology, isn't as long as it used to be.
Do
you want to give a little color on the DeepSeek situation, how you interpret that?
I'm going to take a different point of view from this, or different sort of perspective on this. That let's just look at the market of what happened since that news, right, about a month ago. And what's super interesting here is if you look at Chinese equity market, right, there are two really real onshore to offshore Chinese market. One is based in Shanghai called Shoucom, that's the index, and that's dominated by financial firms and industrial firms. it's about year to date flat. Okay, it's almost nothing. There's some volatility, of course, but so far call it around flat. And there's an offshore market, which is the Hang Seng index, and that's dominated by tech companies based in basically Hong Kong or Shenzhen area. And
When
that's
you say offshore market, what does that mean
yeah.
in this
So
context? Can you explain?
yeah, in Chinese market for across everything like currency and especially these indices and firms, there are two systems. One is based sort of onshore, with mainland China companies that are based in mainland China, and there's other sort of companies based around the south in special administrative regions like Hong Kong and Shenzhen, right? And that's grouped up is mostly tech companies that's being grouped up into that, and that's considered offshore market. And there's also onshore and offshore Chinese yuan, by the way. There are two currencies being traded, and one's controlled directly by the central government, and the other one is more or less freely traded, not really, to still determined by the fixings. Anyway, so that's sort of a decoupling that introduces this potential for decoupling onshore and offshore. But what I just discussed is the onshore market of China, which is dominated by financial, industrial, traditional firms, is sort of flat, not really doing much this year. The offshore market, which is dominated by tech companies like Alibaba, right, and DeepSeek, of course, and which is not publicly traded yet, but you know, most of the tech companies are using these AI are publicly traded companies, have rallied. Like this offshore index has rallied over 15%. I think it's around 20% at this point, right, year to date, which is one of the craziest performances we've seen in the equity market. And that all of that was triggered by DeepSeek news in the past month. All of a sudden, like you said, Mark, people realize, wait a second, China's not a year behind. In fact, China's only maybe 3 months behind of the cutting edge AI models in the US that, you know, companies spend billions and billions building over decades. And, you know, the argument for anything else is kind of almost irrelevant, right? How they got here, what chips they use, how much money they use to train, none of that is actually relevant. The only relevant point is they're 3 months behind, and that's it, right? So that made people realize, wait a second, so they're regardless of what they're doing, China's there, China's competitive, which means companies built onshore and offshore in China on the back of this technology is also going to be competitive, right? If they're AI enabled, they're not going to be that far behind US competitors, which is what triggered this whole rally in tech companies. Fundamentals haven't changed, right? Like you look at earnings, yeah, earnings have been great, frankly, for the past 2 years for a lot of these companies. Xiaomi, you look at XYLD, right? You look at Alibaba, these are direct US competitors, big, you know, the Magnificent Seven competitors. The earnings have been beating, and nothing's really changed from this DeepSeek news. But the sentiment around global investors around this has experienced a clear shift. Not to mention, there's a really critical meeting that's flying under the radar, at least in the US media, between Xi Jinping and the tech leaders in China. Let me remind everybody, about a year ago, there's news that Jack Ma is being chased, right? Like the government is looking for him and potentially imprison him for a variety of accusations, and he's just hiding in Japan. And that's a year ago. Now he just shook hands with Xi Jinping, but in a public setting with photos out there, which sends a signal, right? That the administration is changing their stance around tech, maybe to compete with the US because they recognize that they're not that far behind. They want to win this game. But the entire administration just changed their stance, what seems like overnight. And that is another critical reason that is really helping investor sentiment and triggering a ton of capital inflows from hedge funds into these tech companies. So the takeaway is, I think this is the drastic shift. This is a monumental shift in tech potentials and in how investable these assets are in China, because they've got the central government support, they've got external investor sentiment completely reversed and now supportive, and they have actual fundamental tech that's not far behind that you can actually build on top of to be competitive in other areas. This opens the door, frankly, for a lot of capital to be invested in this area in China, at least in the offshore market. So yeah, that's the significance of DeepSeek, right? The technology itself, the news itself, is not that important. It's just the implication of it. Yeah,
it's so interesting how rapidly the Chinese policy can turn on a dime without changing the administration.
Yeah.
Usually, then in the U.S. that happens with an election cycle.
Exactly.
It's a fascinating paradigm. How does this all play out with their regional politics, right?
Yeah.
Let's focus on Russia first. Fairly recently, um, the U.S. administration has been, I think, safe to say, distancing themselves from Ukraine to, uh, try to solve for some sort of peace with Russia. And in the process of that, it seems like they're signaling they're getting closer to Russia directly.
Yep.
And Russia has, at least recently, been pretty close Chinese ally. How does that shift around the musical chairs a little bit?
To me, there are two major implications from this. Number one, U.S. is not just backing away from Ukraine. U.S. is backing away from pretty much all European allies. J.D. Vance made it very clear with his speech at the Munich Security Conference. He literally said, during the speech, he criticized live to their faces of the European defense ministers across the board for retreating from free speech and democratic values. He made it very clear. He was criticizing them to their faces. And he cited things like how there's been the annulment of Romania's presidential election result due to alleged Russian interference. Right? So he's basically suggesting that Europe fear their own voters. And to which the European, all the countries in Europe's response was absolutely unacceptable. And not only that, the administration is also calling publicly for European defense autonomy, meaning withdrawing support for overall military support for Europe, not just Ukraine, just across Europe for NATO, which then the response from European leaders is in a consensus to boost defense budget beyond the NATO minimum 2%, right? So they're really trying to build their own military power in Europe, which is exactly what what the current administration wants. But all of that, like I said previously, is kind of also pushing them to now with less dependence on the US, pushing them to the east, right? To China because the economic dependency. And so that's one major implication is this clear withdrawal from European allies and independence on both sides. And Ukraine is just sort of a sort of at it's the head of the news cycle. It's sort of because that's what the most important thing that's happening right now. It's capturing all the attention, but the underneath, if you look at underneath, it's what's happening is really broad-based withdrawal from European allies. Number two, you mentioned about Russia. The signal that Trump administration send is yes, they're not necessarily warming up to Russia, but they're willing to engage these bilateral sort of agreements, completely undermining any other involved parties. This is definitely giving China some thought about Taiwan, right? We're talking about, look, if Trump is this negotiable around Ukraine and are willing to sit down in a direct dialogue over something so sensitive, something that U.S. has been funding and literally fighting on the other side for 4 years, 5 years. And why can't China and U.S. reach and sit down and talk about Taiwan without even involving Taiwan and reach some sort of agreement that, and frankly, it's going to benefit China mostly, not U.S., because U.S. doesn't really have much to gain from here. Why wouldn't there be a possibility? So if I'm Xi Jinping, that's something that's on my mind right now. And I would want to engage in that dialogue sooner rather than later, just capturing the momentum of what's happening out there.
Is that broader geopolitical opportunity inform the seemingly accelerating hot activity happening with Taiwan? I don't know if you recently in the news, apparently a Chinese ship was cutting the underwater internet cable connecting to Taiwan.
Yeah.
There's been a bunch of other test-stirring activities that are pretty, significant, but like not war level.
It's quite interesting. I think so. This type of activities and small news headline happens all the time. It's constant. It never really kind of stops. But China now has got a lot of options to play this game. They don't have to engage militarily anymore. It's all of a sudden they can just dominate economically and make Taiwan more dependent on China. And by the way, the chips companies are shifting away and have been shifting away their manufacturing plants away from the actual land, right? Like shifting to U.S. and other places. So strategically, away from military, anything short of a military invasion, Taiwan now all of a sudden seems a lot less important to the U.S. strategically. right, from a chips perspective. So does the U.S. really have the incentive to engage in any sort of confrontation with China over this? Not really, at least less and less, right? And China's definitely not. They're smart. They're capturing this momentum, and anything they can to make Taiwan to be more already. They're already very dependent on China mainland, but if they can somehow make it even more economically dependent through resources and cables and whatever it might be, while weakening the ties between U.S. and Taiwan, that's all in all their interest to do so. So I think this is I wouldn't say this is the golden opportunity. Maybe it is in a decade for China to do something about it.
It seems like the other dimension I hear about is there's political support and shift within Taiwan. I'm sure there's some causality in how that's coming about.
Yep.
To reemerge with China. So it seems like drawing out the line far enough, no matter how you cut it, most of these trend lines are going to lead to a merger of the two geographies, particularly as the technology significance to the U.S. goes away.
Yeah. China can play this game as a long game, right? It could be done over 100 years, and they wouldn't care. For China, that's like a blip in history, and they wouldn't care. For 100 years in the U.S. history, that's a third of our history. So I think that's ultimately where the agreement is going to come from. There's going to be some sort of unification, quote unquote, but over a long period of time that both sides can accept. Potentially, that's going to be the ultimate outcome.
And you were just there, visiting families. So what's with all of this kind of abstract concepts and landscape, how does that play out on the ground? What's the sentiment, the energy of the people?
I was in Beijing. I was in my hometown, which is Zhengzhou, the iPhone city and a major manufacturing and transportation hub in China. I can say that it's as if the pandemic never happened, right? People are back on the street, shopping, spending, things, buying EVs. Things are sold out, and movie theaters is full. I think things are looking really good, as if it's pre-pandemic. The one area that's clearly still weak is housing. So you see these bankruptcies, signs for bankruptcy of real estate brokers in China, literally laid out on the street. You can see houses apartment buildings are sort of still semi-empty. At night, lights turn on, right? You can really get a really clear picture of how many of them actually have people live in them. It's not true again for all cities, but for select cities, this is definitely true that there's still somewhat overbuilt, oversupply, and that's still going through the system. But also the housing market, which is still clear a weak point, it's impossible to see, at least for me, any sign of weakness or somehow change in sentiment. That whole protest period, people were unhappy about being locked in the house. All of that are over. It's it's not even in recent history. It's long forgotten, and no one even remembers about them. People just went on with their lives and with the same sort of sentiment as before the pandemic. So that's the general feeling on the ground. And there's definitely, I would say, some concerns over the leadership on what happened. People are kind of talking behind the scenes as opposed to in the open about what happened and whether they could happen again. Sort of this autocracy that happened during the pandemic. But in the day-to-day lives, no one seemed to really pay that much attention anymore. Yeah.
Now, on the housing side, when you overbuild housing supply and you have a declining population, so declining demand, this is a problem that's not going to go away overnight, right? How does this resolve? Does this pricing just goes down and they shutter some of the supply? Like, what is this? How does this evolve?
Part of the reason why this is so difficult is because of the demographic problem. Right? It used to be the case that generations pass, and the number one gift parents can give to their kids is buy them an apartment. At least that's been the case traditionally in China, and now people are not having kids. Truly, not having kids or having less kids, and there's just less of the change of hands of these newly built apartments, and it's difficult to just somehow let it, stop building and let it kind of pass through with demand and over time, because demand is also dropping significantly as we kind of, as I gave the data earlier. ultimately it's going to be some pain. There's some, the government will have to step in for sure in a even more direct way that they've already been buying these properties, potentially put it on the country's balance sheet, right, using sort of a capitalist structure and just write them off through taxes. And that's really the only way. The insurance firms cannot cover this. Definitely not the property developers. A bunch of them already went through bankruptcies and restructurings, and the banks cannot stand it. It's just a systematic shock if they were to be the one ultimately taking the fault. And not to mention already the bad assets they've been warehousing for years and years in these sort of sovereign-owned investment banks. So ultimately, the answer has to be the government, and they have to step in and just write them off. It's the only way to really re-trigger so that the next wave of developments and growth.
Taking into account all these short-term, medium, long-term trends we've talked about,
Yeah.
What are the opportunities?
Yep. I've always been an investor in China through ETFs, offshore markets, and I'm based in the US and I'm a US citizen. But so I'm throughout this whole cycle, up and down, I've never been pulled out of my assets. Right? It's always been invested and stayed invested. And I will continue to be an investor because especially in two sectors in China, one is tech, overall tech, especially related to AI. It's difficult to invest directly into these models and the foundation layer because they're not really publicly traded. The one way to access it is through, for an average retail investor, is through ETFs on these big tech companies that tangentially have to do with AI. So stay invested there because the multiples are still trading way below not only their office, obviously US, but which is probably the right thing to do so, but also below their historical averages, and also in EVs. I don't know if people are paying attention, but BYD, the biggest EV market, manufacturer and retailer in China, their stock rallied 50%. This is not investment advice, to be clear, but I just want to point out as a fact that BYD rallied 50% year to date, while Tesla is down 20%. Right, the two biggest EV automakers in the world have 70% differential year to date in less than 3 weeks. Right, if that doesn't tell the sentiment of for global investors and how they think about who's going to win and how that's going to play out, at least the sentiment in China, I don't know what else. So I personally love the EV sector. There's still other companies that are sort of flying under the radar, at least in the US community, and away from BYD and all these AI-driven companies that are trying to compete with the US. So I think China all of a sudden definitely became a lot more investable versus the last couple of years. So that's how I would play it. But home is the US market is actually doing quite well as well, even though S&P is kind of struggling to make any sort of improvements. But if you look underneath the hood, it's besides tech and consumer discretionary, every other sector is flying in the US. Fundamentally strong, macro data are fine. And so I wouldn't really sort of make any drastic shift per se, but definitely look at China now more than the past couple of years.
Thank you, Chris. Appreciate you doing this. And a quick reminder for everybody, Chris is an SEC registered RIA, and nothing he said today should be misconstrued as investment advice.
Thanks, Mark.
All right, I hope that was helpful insight for everybody. The thing I wanted to kind of double click on, taking a little bit of a historical lens of this, and we talked about it in the pod, is that the short-term, good, bad, ugly that we hear about the Chinese narrative and story around casual conversations in the US is just that. It's short-term. If you rewind and look at where this country was in the 60s, 70s, 80s, economically versus where it is today, the small bumps up and down in particular economies or rates or other things going on are almost trivial. The long, steady march that the country is on economically is very clear. Now, it's possible things could shift. It's possible it could get derailed. World events can always happen. But it's very clear China is playing a very important role globally in the economy and is going to very, very likely continue to do so. So with that, we'll catch you next time.